Hey guys, hope you're doing okay. In this video, I'm going to share with you a 1 minute strategy that you can use. So we've talked about liquidity sweeps, fair value gaps, equilibrium. Talked about breakup structures. All of these, we're going to combine them all together, and I'm going to show you how you can take a 1 minute strategy trade from everything we've talked about in the course. I'm going to show you how it works, and I'm also going to show you how you can find it. So I put together two examples. I'm basically just going to walk you through them and just show you my mindset going through it. So obviously this is hindsight, but we want to be on the 1 hour. So on the 1 hour, the first thing we want to do, we want to jump into, let me show you. We want to jump into, this is the London session, right? Market opens up at 9 o'clock and pre-market opens up at 8 o'clock. So the first thing we want to do, let me just remove them to start from the beginning so you can see the steps. Like let's say we come to the market at 8:30. We just had our coffee. We come to the market at 8:30 and we mark at the 8 o'clock and we mark at the 9 o'clock. This is what we do. So we mark out the 8 o'clock and 9 o'clock. The thing we are looking for is to set our bias. The bias is I want to know where the trend is going. I want to be focused on where the trend is going. By the way, you know what? I have a checklist that you can screenshot right here. We're looking for these things to be swept, and we'll also have in mind the equilibrium. Equilibrium is not that important, but we want to have it in mind. I don't want to make I don't want to have another step to check. So I want to check the trend. What is the trend saying to me? Is it a clear trend? So how do we check the trend? We check a trend with a break of structure. You can see that this is a high, and we mark out that it creates a break of structure before market opens in a 1 hour time frame. So when it does that, I know that the trend now is bullish before market opens. This can change after the market opens because if the 9 o'clock candle opens and closes here, it closes basically on a 1 hour break of structure, which makes it more likely to continue bearish. But now in this scenario, we are bullish. So what do I do when I do this? I usually mark out the 1 hour liquidity right here. There's a low right here. Now, mind you, I don't know what the next candle is going to be. I want to mark out the 1 hour liquidity right here also, right? So then I want to jump to the 15-minute, and this is the area where I want to mark out the 15-minute liquidity right here. Because the market, what does the market usually do? The market usually, if it has a trend to the upside, it goes down, it takes out the liquidity, and then it continues up. So this is the strategy we're using on the 1 minute. So we're waiting for it to sweep some liquidities before continuing the the trend bullish. So on the 15-minute, this is what I'm doing. I mark out the 15-minute liquidity right here, and I'm waiting for the market to open. Then I jump to the 1 minute. When I'm jumping back to the 1 minute, I'm waiting for the market or the price action to sweep these liquidities or one of these liquidities before I can go and test out the breakup structure, the fair value gap, and, and focus on the risk reward. So now we have one thing set. We have the trend set. We know that we are bullish. That's number one. Then we continue and we see as soon as market opens, it sweeps this liquidity right here and it sweeps this liquidity right here. So because it swept this liquidity, I'm focused on taking a reaction out of from this. Mind you, this is a 1 hour break of structure here, 1 hour liquidity on the downside because it's higher time frame. There's a probability that it can go down and take out the higher time frame liquidity before making its move. So I'm waiting for it to give me a reaction. I'm waiting for it to do a what? A break of structure. Now it didn't do a break of structure. Look, there's a high right here. The body of the candle didn't close over it. There's a high right here. The body of this candle or the candle next to it didn't close over it. So what happens now? We jump down to the 1 hour liquidity and we are now focused on waiting for a break of structure to the upside in this area. So I'm waiting. It's created a high. I'm putting my my marker right here. I'm waiting for it to close a candle above for me to react from it. So we have two things in place, just to be clear. We have a trend, we know that we're bullish, and we have a liquidity sweep, right? So I'm waiting now for a break of structure. Now we created a new high. I'm just moving. Now it created a break of structure, right? So number one, it created number three, let's say, it created a breakout structure, and I'm waiting for a fair value gap to be created and to have a reaction out of it. So it continues down. It created a new high right here. Right, I'm waiting for it to do a break of structure. And this is, by the way, not a clear break of structure, so I wouldn't have taken a trade out of this. So there's a high right here. I'm waiting for it to close above it for me to. Now, this is a nice break of structure. So this is a nice break of structure. And during this, it created two, or not really two, but one and maybe two, depending on the candle that happens after it. Fair value gaps right here. So I'm just giving it some. There we go. We have one, we have two fair value gaps right here, and we're waiting. Some people just take a trade and not waiting on the fair value gap because they say that they can have the same reaction or they don't care about the stop loss being that big. But we are waiting, either taking a trade out of this and putting our stop loss underneath the liquidity, or taking a trade out of this, putting our stop loss underneath this liquidity. So the lower the fair value gap, um, the shorter the stop loss will be. So we're waiting for it to give us a reaction to the downside before we enter. There's a fair value gap right here also. Do you want to take this from this area right here? This will give us a 40 stop loss. It's too big. So what do I want to do? We want to wait for it to give us a reaction to the downside on a stop loss on the fair value gap area. See, it continues down. And this is the area where it swept liquidity. It did a break of structure. It gave us a fair value gap reaction on this area right here. And what do we want to do? We want to wait for it to give us a reaction to the upside like this because we are bullish, right? I wanted to create a bullish candle like this to be able to trade or to take the trade. So in this scenario, this is what I want to do. I want to take a trade right off this one. And because the candle is so high, I usually put my stop loss underneath the second fair value gap to not get that big of a. We can put it also under here, but it will give us too high of a stop loss. So I put it underneath the second fair value gap. And outside of my backtesting, outside of what I've done and the data that I have, I know that I usually put my stop loss underneath the middle fair value gap if there are three fair value gaps created, right? So I put my stop loss under here, I remove these areas, and I take the trade. I take the trade, I enter, and where do I put my stop loss, take profit? I usually put it at the highs, right here, and on the second highs on this area, or the 15-minute highs where I take my profit. So if I jump to the 15-minute, I want to see where liquidity lies. Liquidity lies on this area right here, and liquidity lies on this area right here. So I want to take my first take profit right here, and the second one right here in this area. That is it. That's how I do it on the 50 minutes. Because we followed all the confluences. We followed a liquidity. We followed, and let me show you also. If you go to the 1 hour, did it follow? Did it follow the equilibrium? Yes, because we are taking a trade in premium. If you mark out the high and the low, we took a trade in discount. Sorry about that. We took a trade in discount and it continues to premium. And when it passes through premium like this, it usually means that it's going to continue up. All right, that's one example. Let me show you another example on how you can do it. I marked these out beforehand. So this is the first thing we want to do again. We want to jump to the 1 hour. Why 1 hour? Because we want to set our trend. We want to set our bias. So we wait for a break of structure on the 1 hour to the upside or to the downside. And what do we want to mark out after that? We want to mark out the liquidities on the 1 hour. This is before market open, 8 o'clock, 9 o'clock. We jump back to the 15-minute. And what does the market want to do? It didn't want to give us any 15-minute liquidity, right? So we are resting on this right now. So what do? We wait for the market to open, and you can see that this created a 15-minute liquidity right here. So we're waiting for either this or this to be swept. And then we wait, we go to the 1 minute and we wait for it to be swept. So we're continuing just sitting on our hands and waiting for the 15-minute candle to get swept. It just got swept. So what do we do after that? We're waiting for a break of structure to the upside to be created. So we're waiting. What did it do? It created a 15-minute fair value gap. Oh, this is a good example. It created a 15-minute, it created a 1 minute break of structure to the upside. Not on this candle, on this candle. This is a nice break of structure. And it gave us a fair value gap right here. But why didn't we take it? We didn't take it because it it was an invalid reaction to the fair value gap because it closed under it. See here? Boom. It closed under the fair value gap, which gives us an indication. This is overclass, or how do you call it? This is a side note. This is usually what I want to take a short because it's called I call it the shot or the espresso because it's such a quick one-to-one you can get right here. You take the trade, you see that it's closing, you see that it's gonna go to the reaction to the downside. So I just take a trade from here and take a quick. It's just a quick one-to-one. I'm doing this because I'm seeing this is from experience and I've seen this happen so many times. That's why like I'm taking a quick one-to-one just to play around with it basically. So I'm waiting for it, but I'm still bullish. I'm still bullish, and I'm waiting for it to do a break of structure to the upside like it did right here. This is where you want to be cautious because sometimes the candle closes over this area and it's not a valid break of structure. Now this is a valid break of structure because the body closed over it. So we're waiting for it to create a fair value gap. The fair value gap got rejected. Now we're waiting for it to do another fair value gap. The fair value gap again got rejected. And we're waiting for it to do another fair value gap like it did right here. And we're waiting for it to do a reaction out of it. There we go. See, it entered on this fair value gap. So we want to see a positive candle to the upside to get more confirmation. It didn't give us more confirmation because if it was a candle to the downside. If we had entered right here, put our stop loss right here, we would have been taken out. You can still enter from here, but I'm waiting to get more confluence from this candle right here. So now what did it do? We're focused on break of structure. It created a new fair value gap right here. I want to see a reaction out of it. There we go. You see, it created a fair value gap. It created a fair value gap. I'm sorry, maybe you're not seeing in the. This is it. This is the checklist that I'm using. Feel free to screenshot this. All right, let's go back to it. So I created a fair value gap, and this is the place where I do want to enter the trade because it gave us a positive reaction. We are bullish, right? Positive reaction to the upside. So what do I want to do? I want to be able to take the trade from the close of this candle right here and put my stop loss underneath, right? And I want to mark out the take profit areas, which is, yeah, Habibi. I want to take profits right here. I want to take profits on like I'm thinking, where is the market more likely to return from or to reverse from, right? This area right here, because this area or a fair value gap on the 5 minute on this area right here. You can see that it's a 5 minute fair value gap right here, like this. right? These areas are crucial. Maybe you can change, maybe you can Swift, maybe you can continue back up. So what do you want to do? We want to put our first take profit on this area right here. Our first take profit on this area right here, or in the middle of the fair value gap that I usually take it, because it has a high probability of reversing down. So what do I want to do? I want to enter the trade, put my stop loss underneath this area right here, and wait for it to take my first take profit. What do I do after it takes my first take profit? I move my stop loss to break even. So I have a 50% loss, 50%. I take 50% of the first position and I let the rest run. So I put my second stop loss, take profit on this area right here because it's a highs and it's on the 15 minute. Right? Let's see what happens. This is gonna probably take me out. See? Boop, it took me out. So we took our first take profit, which is fine. So this is what I want to do because we haven't traded for way too long, right? We're still inside the market. I still want to trust the trend. I still want to trust the trend because it didn't give us a reaction to the upside. The banks and institutions still want to take out more liquidity before continuing to the upside. So I'm waiting for it to do another liquidity sweep. There you go. Just did a liquidity sweep on the 1 hour and I'm waiting for it to give me a better reaction. This is a fair value gap right here, and this is a break of structure. Not that clear of a break of structure. I don't like these break of structures. So I'm waiting for a better and more clear break of structure to the upside. So what do? I'm putting my marker right here to see if it can give me a better break of structure to the upside. There you go. It just gave me a break of structure to the upside and on this area right here, to be honest. And it give me a fair value gap right here. And these kind of trades, this is a way too smooth fair value gap to not enter from. So I'm just waiting. In my case, in my perspective, I'll put a limit order right here. But for the sake of this video, I'm going to wait for it to do a reaction to the upside before entering. If it don't do a reaction to the upside, I'm not, there you go. It did a bullish candle right here, and this is what I want to enter on the close, right? Put my stop loss underneath, and I put my marker of the take profit on this area right here, and I mark out the take profit right here. This is the areas where I usually, because we are so late on the day, we have taken a trade on around 11:40, right? And this is a high probability trade. I want to take my entire position off on the first take profit. So I enter the position, I'll wait and see what it does. And right, come on. There you go, I think. Yep, there we go. It took the entire position right here. So that's how it works. That's how you can take a trade and take an entry on a 1 minute. That's how you can find the 1 minute entries, and that's how you can mark out the take profit right here. You will tweak and adjust it based on your preferences, based on your personality, based what satisfies you. Maybe you don't need to take a 50% take profit, but that's how I do it, and I adjust it depending on the market. So this is the area where I usually take I take profit on the 50 minute mark on the 5 minute because there's a probability. I'm working with probabilities that it can swift as it did right here. So if I risked 1% on this area right here, what would have done? I would have maybe, what did my take profit look like right here? Maybe would have a 1% win only, right? So this 1%, I use the same 1% on this area right here, which gives me a 1 to 2.5. So at the end of the day, I'm up how much? Like 3.2% on the day. That's a good day. That's about it. And if you have any questions, feel free to ask them in the comment section below or in the community.